Hello and welcome to the channel. Today we are going to solve the MCQ of part 1. These MCQ are from study material PASKey. So we are starting to solve the MCQ from unit 1. So let's start. So the first question is saying that what is the normal statute of limitation for an IRS assessment of a tax return from which more than 25% of taxpayers' gross income was omitted. If the gross income omitted more than 25%, the statute of limitation. It's a question from SOL topic, statute of limitation topic. So in this case, if your gross income exceeds 25%, then at that case statute of limitation is 6 years. So the right answer is 6 years. The next, Roxana and Baptiste file a joint return. They file joint return. Their tax refund will be applied toward the Baptiste. Means R and B both file MFJ and tax refund applied to the B. B's unpaid child support obligation from earlier relationship. Means he have a earlier relationship and one child. So Roxana's refund will be applied to Baptiste child support. So the required portion of the joint refund Roxana should file. Means here the Roxana and Baptiste, he have child, some other relationship, his refund applied to his child. So in this case, the Roxana can be claimed as injured spouse, not innocent. There is two more important topic, not a damage, not equitable. There is two important topic. One is injured spouse, one is innocent spouse. And this is the important topic. If you are unable to understand, please comment below. I'll make a separate video on innocent spouse and injured spouse. Okay, so in this case, the injured spouse, because his one taxpayer's credit will apply to the another taxpayer's liability or support or obligation. In this case, the option will be C. The third question is Mila age is 26 and Leonardo age is 31. M and L are married and live together. Leonardo income is $45,000 in wages. Mila did not work and has no taxable income. One of the important point, no taxable income. No taxable income. Mila refused. She refused. Means both are the married and live together, but she refused to file joint tax return. If she refused to file joint tax return, so the most probably he or she can choose MFS with Leonardo. Based on the above information, which of the following statement is correct? So Leonardo is required to file the return. Yeah, it's correct. He is required to file the return. He must file MFS. Yeah, it's correct. He must file MFS. Mila is not required to file it. Correct, because he have no taxable income. So up till here, correct answer is A. Let's check another option as well. They are both required to file. Required file, no, not required to file both, because she has not taxable income. Leonardo is required to file tax return. Correct, and he can claim his wife as dependent. No, wife can never be claimed as dependent. Okay, neither is required to file return. So the correct answer is A. Hope you all are getting my point. Which of the following taxpayer must have individual tax identification number? Okay, so basically the tax identification number 10. Who can claim? Non-resident alien, required as tax identification number. if not eligible for SSN. Okay, to file return. Let's move to the to the option. Option A, a non-resident alien with J1 visa and social security number who moves to the US. So it's a wrong answer. It's wrong. If he have a social security number, so why he need a TIN? Okay. Anyone who does not have social security number but has a US source income, no, it's also the wrong answer. A non-resident alien who must file US tax return is not eligible for the social security number. Most appropriate answer is non-resident alien, US return, and not eligible for social security number. Up till here, it's the most appropriate answer. Let's move point D. All non-resident alien that are physically present in US for 183. No, it's not right. This test for the residency test. Okay. So the correct answer is C. Next, question number 5. Generally, how long should the taxpayer keep supporting document for their tax return? Generally, the tax return keep for 3 years for the date of return filing date or due date, whichever is later. So let's move to the option. 4 year, no. 3 year, correct. 2 year, no. 10 year, no. Then 3 years from the date of return, correct, was filed, or it's important, or the return due date, whichever is later, correct. The right answer is B. Okay, let's move question number 6. The Christiana is a single and earned 3,50,000 as a self-employed software development in the year. Under the estimate tax safe harbor rule, the high income taxpayer, he can avoid an underpayment penalty if he pay what percentage for the previous year. So basically these questions for the estimate tax liability, estimate tax payment. So in this case, there is two income group limit, 150 lakh or 75,000. On these portion, if income exceed 150 or 75 lakh, then the provision 110% will apply. Basically, the estimate tax liability provision is 90% of current year tax and 100% of previous year. These 100% can increase if the person earned income increase from 150 or 75. 150 in case of MFJ or 75 in case of MFS. Here the question asking, Christina is a single and earned 350 as a self-employed during the year under the estimate tax safe harbor rule. High income taxpayer means whose income exceeds this limit, he can avoid an underpayment penalty if he pay what percentage of his prior year tax liability. So he is asking what percentage will apply. Then in this case, his income exceeds 150 and 75, then this rule will be 100% change will be 110% of prior year liability. So the correct answer is 110 year, because here asking for the prior year tax liability. So the correct answer is D. Okay, let's move to the question number 6. Will file a single return. File a single and has no dependent or refund credit all income of his wages based on the figure below. Is C required to pay the estimate tax for the current year? If two conditions will satisfy, then he will not have to pay the estimate condition. Condition first is if withheld is 90% of current year or 100% of previous year. Here why I am saying 100%, because he is a single, his AGI is lower of 75. So I'll take a 100%. So let's see, tax year will be withheld in the current year. His withheld in the current year is 10,250. And what is the current liability for this year? The current liability of this year is 11,270. So we have to check how many percentage. So just took a 11,270 into 90%. It would be your 10,143, and your withheld is 10,250. So your withheld is more than your 90% current liability. So he does not require for estimate tax. Hope you are getting the point of a calculation. Estimate taxes is very much important for your exam, and I am sure you will get a 2 question for the estimate tax payment. So the correct answer is yes, no, no. It could be none of the above. No, C is not required. So let's for the point B. No, C is not required to make a estimate tax payment. It could be your answer. C is not required to make a estimate tax payment because C is, oh my god, C is not a self-employed. Here is mentioned not a self-employed. It's a wrong. It's a wrong. So then the correct answer is B. Okay. Then let's move to the next point. So everyone keep in mind, for the estimate tax there is 3 limit. One is 1000, second is 90%, third is 100%, and fourth is 110%, and 150 and 75 income limit. Let's move toward the question number 8. Yeah, Kathleen is 20, is single and full-time college student who claimed as dependent on her parent tax return. Her parent provide majority of her tax support. Who provide? Parent provide majority of support and pay all her college tuition and book. In 2023, the Calathina earned 13,990 as wage. How much? 13,990 as wage. Her part-time job. She has no other income. She has no other income. Is she required to file tax return? So for the dependent, we have to check. We have to check the age limit and support. Age limit, support, and income, earned income limit. So as per the rule, if a single is dependent whose earned income is more than $30,850 in 2023, 23 must file tax return. Okay, so here in this case, she is required to file tax return, even though his parent can claim as dependent as qualifying child QC, who his parent can claim as dependent and qualifying child. Okay, hope you all are getting my point. Let's move to the next question. 9. Which of the following is not acceptable reason for the extending the statute of limitation for claiming the refund for the past normal filing deadline? Guys, don't go with a very much complicated MCQ. They are judge you your conceptual knowledge. They will not asking your very much complicated question. So here in this case, again question from SOL topic. So they are asking not acceptable reason. Not acceptable reason. In the SOL topic, there is two important concepts. One is time period. Second is reason. Only the two concepts from the SOL topic you have to remember. First one is bad debt for the worthless security is an acceptable reason. Living in FDA, Federal Disaster Area, it's also the acceptable reason. Exception for military person, also the acceptable reason. Living outside of a country for 3 years, it will be not your acceptable reason. Okay, so if you are not understanding the point, please refer the SOL topic. Let's move the next question. Baibana is 28 and paid estimate tax in the prior year totaling 2560 on December 10th. She closed her business as a self-employed wedding planner. She is now unemployed. She is now unemployed and living with her parent. Babiana expect to have zero tax liability. What is zero tax liability? Which of the following statement is correct? He don't have a tax liability, but she has paid prior year total estimate tax in such amount. Here the safe harbor rule will work. She is still required to make estimate tax payment. Then no, she is not required to make estimate tax payment in 2024. Correct, because she does not have any tax liability. Because if in the current year she has zero tax liability, she will not allowed to pay estimate tax. So the correct answer is B. The next question is, Alisa required the extension form 4868 to give himself extra 6 months for filing her return. Okay, she filed extension. She chose not to pay any taxes with the extension because her record was disorganized and she is uncertain the amount she owed. There is 2 points. Her record are disorganized and uncertain to owe. On 10th of October, when she finally prepared her return, she discovered that 3000 income tax. She paid the full amount when she filed the return before the extended due date. What penalty, if any, will Alicia have to pay? On 10th, the most important line is on 10th of the October, when she prepared her return, she discovered that she owed 3000 in income tax. As we know that extension is allowed, but we have to pay the tax liability on on the original due date, which means the extension is allowed, but we have to make a payment of a tax liability. Okay, let's move to the option. It says she will owe interest on the amount owed and late payment. She will own interest. So she will owe interest on the amount owed, means interest on 3000 or the late penalty, both will applicable. So up till here A is most accurate answer. Let's move to the another option also. She will owe interest on the amount owed and a late filing penalty, no, late payment penalty, not a filing. And she will owe the interest on the amount owed and late payment penalty and late final, no, it's also the wrong. She will not owe, it's wrong from the very beginning. So the correct answer is A. Okay, next question is, what does the 10-year collection, again the question from the SOL, 10 year in the case of fraud, sorry, when does the 10 years collection statute period from the IS will begin? It's a begin. Yeah, I misinterpreted the question before the reading. So here is asking when the tax year when the statute will begin. Actually, I just thought in the mind 10-year limitation will be on fraudulent in case of taxpayer did any fraudulent, but leave that point, just move to the question. So the correct answer is IS begin to run, statute period for the IS begin to run. Let's move to the answer. On date of tax is assessed, on the date IRS accept the filing tax return, on the date taxpayer receive the bill, on the date taxpayer pay the tax, no. The correct answer is on the date the tax is assessed, on the date the tax is assessed, SOL will begin for the 10 year. Correct. Let's move to the next question. Turan filed his 2020 return on 25th of February 2024. She has balance due 800 on his return. How long she wait to pay the amount owed and not occur the late payment penalty? Here the question is saying she has balance due 8000. She filed return on 2025, but they are asking how long they can file their, they can make a payment without owed any late payment. So the correct answer is until the due date, not extension, means up to the original due date. Okay, let's move to the option. He will owe the late payment penalty unless he pay the tax liability when she file the return. No, she has until the due date of tax return, not including. It's correct, not including. Don't be confused. We have to make a payment until the original due date, not extended. So the correct answer is B. Let's move the next question. Backup withholding for the US taxpayer. It's a very important concept, backup withholding. Please let me know if anyone not understand what is the backup withholding. So the straightforward, the rate for the backup withholding is 24% for 2023. Let's move to the next question. Which of the following document will accepted as a valid means of identification of a taxpayer applying for the tin? So the notary copy no, color copy no, original birth certificate and passport. It will be your valid document identification for the taxpayer apply for the tin, not a photocopy. Hope everyone are understood all the point. If you are not getting any point, please comment. I'll prepare a separate video for that topic. Please join WhatsApp group where I am sharing important notes and video lectures. Thank you.